Yo, what's up YouTube, it's your boy K. I'm back again with another video. But before I start with today's video, I have an announcement to make, guys, okay? So I posted a link down in the description below, guys, okay? So if you click on the link, it's gonna refer you to this page right here, okay? So the reason I posted the link down in the description below is so that you guys can actually sign up using my link. There are benefits when you do this. What you need to do is click on the link, sign up with the broker I use, which is Axness, open a real account with them and start trading, okay? When you do that, I get to give you a lifetime mentorship program for free, okay, because it would be my responsibility to actually start making you a consistent and profitable trader, okay, guys? So what you need to do is click on the link, sign up and open a real account with them, and then after you do that, you can just comment with your email address in the comments section below, okay, so that I can get your email. And then after that, what I'm gonna do is I'm gonna send you a message in your email with my details, okay? And then that's when we're gonna start talking about the package I will be providing for you after you do this, okay, guys? So thank you, cheers. On today's video, we will be talking about price, okay? So you guys know the drill. Please read along with me so that you guys can grasp the information I'm about to share with you guys. It reads here, price. Price is value given to a particular instrument, usually in monetary terms, and its value is dependent on supply and demand. The first point says, if the demand is more, price increases as more traders start buying and driving prices up. The second point says, demand zones on your price charts are around support levels. That's where buyers come and start buying and driving prices up. The third point says, if there is an oversupply, price fails as there are more sellers and less buyers. Point number 4 says, supply zones on your charts are on and around resistance levels where sellers come in and drive prices down due to the fact that there are very few buyers. Every time you open your charts, all you are seeing are the forces of supply and demand at work. If the market is going up, what does that tell you about the demand and supply? It means there's a lot of demand for that instrument. What if the market is going down? Then what does that tell you about the demand and supply? It means there's less demand and lots of supply. But there's something else about price. It has a time component. So the price of something today will not be the same price tomorrow or in a month or in a year. Supply and demand over time drives prices up and down. But how do you represent the value of price over time, which in turn tells you of the supply and demand forces? The answer is your price bars, candlesticks, and line charts. These are graphical and visual representation of price over time, thus telling you a story about supply and demand forces over a certain period of time, which can be 1 minute to 1 month or a year. So just to explain the topic we have here, okay? You could say that price is value, okay, guys? So price is value. That's what price is, okay? And we all know that value is driven by the forces of supply and demand, okay? So just to explain the first point, it says here, if the demand is more, price increases as more traders start buying and driving prices up, okay? So what this means is that if there is more demand for like an instrument or a currency pair you're trading or anything that you could be trading at that time, that means that prices will increase, okay? And as a result, you're gonna have an uptrend on your charts, okay, guys? This is when demand is more than supply, okay? And it says here, demand zones on your price charts are around support levels, okay? That's where buyers come and start buying and driving prices up. So every time you analyze your chart and you see that price is trading on a support zone, you should expect that the buyers are looking at that support level right there, okay? And they're looking to actually start buying that instrument in order for them to actually start driving prices up, okay? Because buyers buy on support, okay? And sellers exit their trades on support levels, okay, guys? And the third point says here, if there is an oversupply, price fails as there are more sellers and less buyers, okay? So this is vice versa from when there is demand, okay? So when there is less demand, there is an oversupply, okay? This is when the sellers step into place and actually start pushing prices down, okay, so that they can look for a low price where buyers would actually want to start buying price again. Okay guys, so the last point says supply zones on your charts are on and around resistance levels, where sellers come in and drive prices down due to the fact that there are very few buyers. Okay, so every time you look at your charts and you see that price is trading within a resistance zone, you should always expect that sellers are looking at that level right there, and that's where sellers tend to actually start entering the market and pushing prices down. Okay guys, so that's where the buyers will be taking their profits when price is in a resistance zone. Okay, and that's where the sellers will start executing trades, okay, pushing prices down. Obviously price is going to be in a sell when the sellers actually start pushing prices down. Okay guys, so it says here, every time you open your charts, all you are seeing are the forces of supply and demand at work, and this is true. Okay, when there's more demand, prices are in an uptrend. When there's more supply, prices are in a downtrend. Okay, that's how supply and demand works. Okay, so how you see this is through your chart. Okay guys, so I'm gonna make a video on graphical presentation, okay, which where I'll be talking where I'll be talking about bar charts and candlestick charts and line charts and all of those, how you actually get to see the graphical representation of price. Okay, and it says here the price of something today will not be the same price tomorrow or in a month or in a year. That's why you see prices changing every now and then, okay, in the market, because the value of something can't stay at the same place for forever. It needs to change at some point. Okay, so that's the reason why you can find uptrends and downtrends on a specific instrument. Okay, because the value changes over time. It could be tomorrow, it could be in a month, it could be in a year. Okay, so that's how supply and demand works over time. Okay, it drives prices up and down. Okay guys, so that's it for this video. I hope you liked this video and I hope you learned a lot from it. Please don't forget to subscribe to my YouTube channel guys, and thank you so much for tuning in. I'll see you on the next one. Cheers.